So we got Google and a property developer called Lend Lease. They're ending a deal around $15 billion. Got a contract they signed in 2019. $15 billion worth of Bay Area real estate projects and 4 separate projects as big tech continues to review the role of offices. And by review, we mean we don't need all that space. Moving forward, this project isn't advantageous to either Google or to Lend Lease. For you guys building it out, this isn't really going to work. Let's call it a day. We'll reconfigure and we will review the role of offices that we were going to build. Let's get into it. 15 billion. What's that get you? What's this look like? Here we go.
You're listening to Seattle Real Estate Podcast.
Google ended its agreement with Australian construction firm Lend Lease to develop $15 billion worth of master plan districts in San Francisco amidst a major cost-cutting drive this year. Yeah, this is all Build Back Better, isn't it? Yeah, the Inflation Production Act, as it was really enacted. Yeah. Not going the right direction, is it, for development? And that's one of those things where you got this $15 billion, city officials were planning that in their future calculations. All right, tax revenue on this bad boy project of multiples. It's going to bring in this amount of revenue. And then you got 30 million square feet. You got 32% vacancy rate in San Francisco already. That's why you're not building any. You don't need any new space. You got plenty of it already available. It's basically just getting leased up by AI companies right now. The two companies were planning to develop 4 campuses across the Bay Area, including a site called Downtown West in San Jose, Moffett Park in Sunnyvale, as well as Middlefield Park and North Bayshore in Mountain View, where Google has their headquarters. This is per Lend Lease. The developments were collectively known as the San Francisco Bay Project. Massive project. And they were expected to commence in 2026. Lend Lease secured its contract with Google in 2019. This is some of the stuff that is, that's, a forever project to go. All right, we're going to put this in place. We're going to do it. We're going to build it out in 2026 because that's going to give us time to get through San Francisco's massive permitting process. I can't imagine what that looks like. The ringer that San Francisco would put these companies through to get something that big built. Or else they just cut a check and, hey, let's rubber stamp this bad boy and make sure all the engineering's good. It's okay. Let's go. Need the revenue. The decision to end those agreements follow a comprehensive review by Google of its real estate investments and a determination by both organizations that the existing agreements are no longer mutually beneficial given current market conditions, Lend Lease said in a press release. And a comprehensive review by Google of its real estate investments. They do a quick look around and go, there's a lot of damn vacant space around here. We don't need to build any more. Plus, what they're talking about internally with Google is that the footprint of space that they need now is so much less. It's just you got way less. You got people coming into the office 3 days a week, right? I think 3 days a week is going to be the new normal. You've got Amazon here doing that. You've got Meta here doing that. Facebook doing that. Handful of other companies. And there is a little bit of variety on that, a little bit of variation on that. But for the most part, I think you're at 3 to 4 days a week is what is going to be moving forward. And 4 days to me is probably pretty aggressive. Let's be honest. Big tech cities, Friday has been the optional work day for years and years and years. So you've already got that. So you're basically down to 4 days. If we get back to 4 days a week, I think that's about as strong as you're going to do. So you still got 20%. You don't need the office space. And I think a lot of companies are recognizing they can just put together this, you don't have to have dedicated, cubicles for their employees. Everybody's got a laptop, brings in their laptop and goes. Nobody's got these big monstrous, desktops unless you're editing video or, designing something where you need a lot of horsepower. Even then you've got this laptop here is a video editing laptop. It's actually a gaming laptop. So it's goosed up to just, I can edit whatever I need to. Google confirmed to Insider that it's working with developers and capital partners to move the project forward, and that this may include Lend Lease. Hey, Lend Lease, you had plans for this with Google. You can go and do it with somebody else. As we've shared before, we've been optimizing our real estate investments in the Bay Area. Part of that work is looking at a variety of options to move our development projects forward and deliver on our housing commitment. We appreciate Lend Lease and the work the team has done to get us to this point, but you're fired. We don't need you. We don't need this at all. Google said it's working with local governments to rezone $750 million worth of Google land to aid the development of at least 15,000 homes. Interesting. So you've gone from commercial to 15,000 homes in just a boop. It additionally worked with Lend Lease to pave the way for 12,900 units to be built in San Jose and Mountain View. Yeah, you've got a massive, massive demand for housing. You do not have demand hardly at all for commercial, especially commercial office space, right? Because San Francisco is just rampant with vacant space. Lend Lease laid off 67 employees earlier this year, including several community, yada, yada. So they got some changes. Google has laid off 12,000 employees. This is all part of Build Back Better. Trust me. I know you're thinking I'm being a smart ass. This is all part of Build Back Better, guys. This is what we're doing. Build Back Better. It feels good, doesn't it? Inflation's still roaring along. It's barely coming down enough for the Fed to maybe say, hey, let's put a little pause on that whole rate increasing deal. The company, Google, also reduced some of its famous company perks, including closing office cafes during slow periods. Is that even a thing anymore? I mean, Elon Musk just whacked that one right out of Twitter, right? Formerly known as Twitter. It's now known as X. Changing the schedule for some fitness classes. You still got fitness classes because enough people are going into fitness classes? Interesting. I don't think so. By changing, they mean canceling. And replacing office equipment less frequently. Copier. That damn copier. It's not getting upgraded. It's going to have to run it out. You're going to have to rebuild that drum. We gotta rebuild the drum. That's what you always had to do, right? Big tech has reassessed its relationship with in-person work since the pandemic, with the likes of Meta also cutting back on office space. In September, for instance, we covered this topic. Facebook and Instagram's parent, Meta, paid $181 million to end the lease on an office in London that it never moved into. $181 million bucks. Yeah, we're not going to need that space anymore. What's the exit amount going to take for us to get out of this bad boy? Whew, that's a lot. 181? Okay. All right. He gets out that pen and it's that check. Well, that's a big one. That's a Wally banger. All right. But I guess it's worth it for us because we don't need this space. Yeah, $181 million. That is a massive, massive buyout of their lease. And then, you're going to turn that space over to, it's just going to sit on the market. So much of this stuff is just going to sit on the market because you don't have the need for it in San Francisco. You've got some acquisition of space by AI, but it's like 400,000 square feet here, 50,000 square feet there, kind of these weird, little takedowns of space. But you don't have the big companies where we're at a low point. We're building back better. Kind of. I mean, if you consider, 12,000 employees being fired from Google. I mean, that says build back better, doesn't it? No? Oh, yeah. Well, anyway, this is where we sit in the marketplace. Got a ton of space. Google just doesn't need this project. It doesn't need this $15 billion project. They have analyzed and they've reimagined and they've rethought their footprint in the Bay Area. Don't need it. Don't need it. Yeah. Let's not build it out, guys. Let's, so crazy. All right. That's it for me on this one. This is a quick one, but it's also a quick story. That's what you got. Thanks again for being here. We'll catch up in the next one. Bye for now.